This is Binu from JRG Securities. The Indian markets may react on Monday to the GDP data that came post-market hours last Friday. GDP expanded at 4.4% in Q1, the slowest in last 4 years, and was below market estimates of 4.7%. In just a few years, it's gone from nearly 10% growth to close to the lowest level in last 20 years. The India core sector growth for July and HSBC manufacturing PMI for August, which are going to be released on Monday, could give the latest trend of the economy. If this data disappoints, then once again currency might continue its weak trend. The monthly sales figures from auto, cement and telecom sectors will be out at the beginning of the week. Even though the usual hike of diesel price happened last weekend, there are expectations that after the parliament session, an additional one-time increase in diesel prices could happen. The industry would watch out for any fresh announcement from the new RBI governor, who is taking charge on September 5th. September has traditionally been the worst month for global stocks. This month, a number of factors to watch, like the Syrian tension, US Fed meet, and German elections. The US president on the weekend said that bombing Syrian target is the right thing to do. Is the US going to war with Syria? Even though Obama can launch a military attack unilaterally, he would prefer to have US Congress's approval first, and so the US strike against Syria is not imminent. However, the uncertainty can create elevated levels for crude oil and increase volatility in global markets. The release of August US jobs report on this Friday, which might be critical in determining whether US Federal Reserve to cut down its bond purchases in mid-September. A strong jobs report will likely reinforce the view the Fed will opt to decrease its bond purchase at this September 17-18 meeting, while a weak one would do the opposite. German parliamentary elections on September 22nd, and if Angela Merkel wins, the elections are unlikely to have significant new implications for the future of the European Union. If otherwise, it would impact. Now, the Nifty has been moving in this descending channel for the last 3 months and showed a downside breakout on the last week, but recovered sharply and closed in this channel only. In the last 3 candles, it rallied by 375 points from the low. A breakout from this channel on the upside is possible if it closes above 5510 with a good volume. For the breakout, the first target is at 5676, followed by the final target at 5770 level. However, it has to cross the initial resistance at 5578 level. All these 3 points are important Fibonacci retracement levels. The other indicators like the MACD is positive, the RSI is trending upside, crossing 2 moving averages from bottom, and is currently at the value of 45. The slow stochastic also gives a positive indication. However, if the index unable to close above 5510, then once again we may see a consolidation in this channel like the last 2 weeks. The downside supports are at 5306 followed by 5220. In the monthly chart, it shows weakness, and all the monthly indicators are showing weakness. In the weekly chart too, all the indicators are now negative, MACD, RSI or the stochastic. So the short term trend could continue to be on the downside for a while. This could change only if Nifty gets a weekly closing above 5700 level.